All right. Good morning, everyone. Happy Monday. Hope you all had a good weekend. Chilled out, relaxed, recharged. Let me know in the chat, though, if the audio is good, and then we'll get jumping on in. But we got a little bit of a dip on our hands here this morning. All right, so looking at the futures here, S&P 500 futures down about 1.2%, and then your Qs here. All right, beautiful. Thank you. Thank you, Tyler, Mr. James, Mr. Rich, Terry, Alfonso. Beautiful. So your S&P is down about 1 and change, and your Qs are, down about 1 as well. So obviously, we'll start with key levels of support here on the daily charts, right? Which obviously, at least for me, is the 21 EMA. So, market's been really strong as of late, but once you're up here trading at 2-3 plus ATR, you're just fighting that growing probability that eventually you're going to come back down home to the 21. So the Qs, we are at the 21 here this morning. And I think, we got to look at this market a few different ways. This is a really strong market, right? So we've seen a couple instances in last month or so where things come in a little bit, we're down at the 21, and the market just kind of quickly shrugs it off. So it's not to say that happens here again, but let's just kind of keep in mind the beast we've been dealing with here. So that's why we want to focus on these key levels of support. So if you can see the Qs, hold the 21 EMA, that doesn't necessarily mean we bounce back to highs immediately, but just in terms of the bullish structure of a daily chart as we head into Amazon, Google, Apple, Microsoft earnings, if we can hold here, we might chop a little bit, but holding here could lead to the push back towards the upside. So there's your key level of support on a daily chart. Now, in terms of the weekly trend here, I'm going to be looking at the weekly 8 EMA, and I think that's an important level of support. So let's line that up here on our chart, and that's that blue moving average. But here's the thing, bullish weekly chart, you're going to get pullbacks of the 8 EMA pretty frequently. And as you can see, we just kind of tend to ride the 8 EMA here as we go higher and higher. So, holding at the 8 kind of will be my first, signal, so to say, that this weekly squeeze is still holding bullish structure. Now, a close underneath the weekly 8, then that does open the door for a potential flush down to the weekly 21. So if we mark up those levels and we look at a daily chart, if we can kind of hold here near that weekly 8, that's right around -1 ATR on a daily chart. I think that's a key level of support to hold for a potential push back towards the highs. We close this week under that weekly 8 EMA, then we could be looking for a flush down towards 14,000, a little bit lower, the weekly 21. So again, just a few different things to look at there as far as levels of support that tie into the structure of the overall trend. So S&P 500, you're under your 21 at this point, and you want to see the market get back above that if you're looking for that immediate return back towards the highs. So we would have to get a bit of a bounce here, but I'm going to give you the same levels of support here on a weekly time frame. If we can hold the weekly 8, this could be just a little bit of a flush, and then we're back towards the highs. A close under the weekly 8. Right? And when I say a close, I'm referring to the weekly time frame. So come Friday, a close under the weekly 8 opens the door for potential flush to the weekly 21. So we mark up those levels. We look at them on a daily chart. If we can kind of get our act together and hold support somewhere in this neighborhood, we could continue to grind higher. We start to close under the weekly 8, then you could get a flush back down towards 4150. So hopefully that all makes sense. Just a few key moving averages that really tie into the structure of a bullish trend. And from a weekly charts perspective, this is still bullish as long as we're above the weekly 21. We haven't tested the weekly 21 since October of last year. And that pullback might feel a little bit ugly, but you're still looking at a bullish weekly chart, and a lot of times those weekly pullbacks of the 21, everyone's losing their crap, everyone's getting all kinds of bearish, right? Markets going into a crash, CNBC markets in turmoil, and it's just a healthy pullback. And if you can look for some support and get long here, you catch a big push. You catch a big push over and over again. So it's kind of the ebbs and flows there of the weekly chart. And you look at the Qs, it's the same thing. Right? Everyone kind of panics as we pull back to the weekly 21, but it's just a healthy dip, right? It's just a healthy dip. So as long as you're above that weekly 21 EMA, the market still has a bullish structure. Weekly. So as far as opportunity here, I don't really see any need to rush. With a little bit of selling pressure here in the Qs, what we got last week was something like an Amazon. Amazon's coming back down towards 21. Now, if the Qs continue to roll over from here, Amazon probably continues to go lower. If the Qs do hold up at the weekly AEMA, and then Amazon holds up here, that's something I'm looking for an entry in. But that's going to warrant a little bit of patience. So from a bit of a, call it bigger picture swing trade perspective, here's what I'm really looking for with this pullback we might potentially see in the market. I'm looking for the pullbacks on the daily charts to offer opportunities for entries on weekly time frames. What I mean by that is I like the QQQ here because I love this weekly squeeze. Now maybe we're done, right? Maybe we're done here, but this is such a bullish, powerful weekly squeeze. And the rule of thumb of the squeeze is once that squeeze fires, you're looking for 5 to 8 plus weeks of momentum. So we're 3 weeks in here. Again, doesn't mean we have to continue, but I love that pullback on the daily chart that might bring you to a little bit of a better entry point on your weekly. So for conversation's sake, we pull back to the weekly AEMA, market holds up here, I go along the Qs, you're looking to play the continuation of that powerful weekly squeeze. And there's a lot of that in the market right now. So if you look at the semiconductors, SMH, the daily chart looks a little bit beat up right now. Right, we'll take a look at it. The daily chart's looking a little bit sketch. But what I love is taking advantage of this pullback on your daily chart to potentially get a better entry in this beautiful weekly squeeze. Get stacked EMAs, the 10x bars are green. I love this weekly squeeze. So as we sell off a little bit here, my major focus is going to be, do we hold support on a weekly time frame? The weekly squeeze is a squeeze I want to trade here. I don't care too much about the daily chart at this point. Any kind of downside we get, are we still holding support? Can I use that pullback as an opportunity to build a position in here? So that's what I'm focusing on. So with that being said, I like the semiconductors a lot. You got AMD. Keep in mind, we're in earnings season here, so earnings around the corner. I love this weekly squeeze. And I love the fact that the last couple of weeks here, the little bit of selling pressure is just bringing it back to the weekly 21. So yeah, AMD might look a little bit iffy here on your daily chart, but all it's really doing is making a nice pullback inside of a beautiful weekly squeeze. So I'm a huge fan here of AMD from a weekly charts perspective. I'm a huge fan of Taiwan Semiconductor. Another good-looking squeeze. You could throw the old Qualcomm, a little bit of QCOM action. You could throw that into the mix here with the weekly squeeze. The list kind of goes on and on, right? Broadcom. So I got a position here in Broadcom. I love this weekly squeeze. And I don't really want to let any short-term sloppiness on the daily chart shake me out of the weekly squeeze here. So I already got a small position, but if Broadcom can hold up here at the weekly 21 this week, you know what? The daily chart might have had a bit of a pullback. Things might look a little bit sloppy here. But if all that pullback does is a little dip towards the weekly 21, and you still got a positive histogram, you still got stacked DMAs, it's still a bullish weekly squeeze, that's actually a position I want to add to. So if any of y'all listening in are in the mastery, that's something we're going to look for here. You got a small piece already. The pullback on the shorter term time frames isn't going to break this weekly structure if we can hold the 21. Something we might look to add to. So I love the semiconductors here. As far as other weeklies, ROKU, at least as of late, gets a little bit extended, as does the, but a little bit of selling pressure from last week. I really want to get long ROKU. Green 10x bars, positively stacked DMAs, weekly squeeze. Yeah, does the daily chart look a little Right, daily charts looks actually pretty clean. So I really like Roku here. I think Shopify is another one for the old watch list here. Even if we sell off a little bit this week, maybe it's just a healthy pullback to the weekly 8. Maybe it's a really buyable pullback to the weekly 21. But I hope y'all get where I'm coming from here as far as the weekly chart can kind of tune out some of the sloppiness, some of the volatility of the Monday through Friday daily chart price action, and just kind of paint you a clearer picture of what's really going on here. So as Shopify was pulling back over here, the 1-hour charts, the 30-minute charts, the daily charts, they probably looked awful. From a weekly charts perspective, you got a bullish weekly squeeze, and it's pulling back to the 21, right? All healthy, normal, tradable stuff. And then a few more here as far as the weekly squeezes go. Obviously, you got the big Zon here. Amazon's only 2 weeks into firing its weekly squeeze. It could be done and over with here, or like a lot of weekly squeezes, this could make for some really good upside. So as that daily chart is pulling back to the 21 EMA here, that's definitely of interest. And then really just, as I mentioned earlier, the QQQ in general. The general Q. Daily chart comes in a little bit. Weekly squeeze holds bullish structure. I like that for a bit of a potential entry. So those are all things I'm focusing on. And in the simpler options room, the training room, etc., this is something I talked about last week. But I'll just kind of briefly, give you all the same spiel here in case you haven't heard it yet. There might be a handful of you or some of you coming into today's session, seeing the markets pull back a little bit, and this might be a bit painful, right? You might have a few long positions that are coming against you here over the last few days, and it might sting, right? You might be giving back some really good profits. As a swing trader, here's the most important thing to keep in mind, right? You want your aggressiveness to be directly in sync with the rhythm of the market, the ebbs and flows of the market. In plain English, what I mean is, at least the way that I run my strategy, the time for me to grow my account and to take a meaningful position and catch a meaningful move is when you have the squeeze at the 21 EMA. That's pretty much the only time I'm looking to get aggressive, right? Now, I'm looking for that in my individuals trades, right? So if I'm going to trade Amazon, Facebook, or Google, I really want to trade them when they're at the 21 in a squeeze. But when the market, the QQQ, the S&P 500, when they're in that squeeze, that's my time to get aggressive, right? So I build those bigger positions here, and then on that high probability push into 2 or 3 ATR, I'm taking my profits, right? So I'm getting big here. I'm taking the big profits into the high probability move, and then I'm putting the big profits over here in the corner. And now I'm not going to call for a top, right? But until the market pulls back in, right? Until we get this moment in time again, I got to keep things small. I know the market might keep going here, so I'll keep looking for really clean setups, but because we've already made that high probability move, and because at this point we're just fighting that probability, we got to come back to the 21, I got to keep my trade small, right? If I can make 15, 20% on my account on that easy ride up, I'm okay giving back 4 or 5% up here. What I'm not okay is making 10% on the easy push and then giving back 10%. Or making 10% on the easy push and giving back 15%. But for a lot of traders, that's like the self-fulfilling prophecy they put themselves through. Market starts grinding higher, they buy every dip. They buy every dip, and it's big position sizes. Just keep forcing the issue. It keeps working, it keeps working, it keeps working. That one time, you get caught with your pants down, so to say, you've just wasted so much time. Giving back all those profits and got all those emotions coming with it. So that really is the key thing. That whole concept of reversion to the mean and average true range and just, the move we're looking to trade out of the squeeze. Bigger position sizes here, taking profits on those bigger position sizes here, keeping it nice and small until we get the next daily squeeze. Hopefully that makes a lot of sense, because what that means is when you can get into that rhythm, look at your plate of opportunity over the last month and a half here. So when I look at my trading account, boom. Right? Once that daily squeeze starts, it's time to take action. So over the last, month and a half here, bigger trade on Google, right? daily squeeze, a couple more trades on Google, a couple trades on Amazon, right? You got all this momentum. This is your time to get aggressive. But then once the market and all these individual stocks have made that easy move, and here we are at +3 ATR, I'll keep taking trades. I'll keep going long, but it's going to be really small. So last week or so, I took a trade on NVIDIA. Y'all know NVIDIA just crapped all over itself, right? Like total defecation. I can afford to give back that little trade because I did my job on the way up with the overall market. I got a trade here in Broadcom right now. Now this is chopping about. It's all over the place. It's a small position, and I don't got to stress it. I got a trade here on Yeti this morning. I'm probably going to take off for a loss. And Yeti's the kind of setup I'm going to trade literally every time I see it. But I took a small position because the overall market is extended. So as we're trading these individual stocks, what we come to learn is that position sizing and aggressiveness really kind of plays into where is the market in relation to the 21 EMA. If we're 2 to 3 ATR above it, I don't care how good the setup you're focusing on looks. You got to scale down on position size because as mama market comes down to earth, so does pretty much everything you're trading to the upside. Get aggressive here. Take profits as the market goes higher. Keep it nice and small, right? That's the rhythm you want to, as a swing trader, you really want to look to get in. Make 10, 15% on the way up. You can lose 2 to 4% on the way down. But if you make 10 to 15 on the way up and then you lose 10 to 15, 20, you're never going anywhere, right? So I hope that all makes sense. The setups, the entries, the exits, a lot of that stuff is just really straightforward. It's the context and the little, intricacies, so to say, that you learn over the years that make all the difference in the world. And I think just for myself and a lot of traders, that's the one lesson we continue to learn repeatedly. There's a time and a place. Why do you keep doing this? Has anyone else seen this yet? I'm inactive. You've been sitting here. Oh, what the hell is my password? Jeez. What is this all about? All right. What the hell's going on here? Hold on. Now I'm sharing the wrong screen. All right. Yeah, we're back in action. For Broadcom, I got short strikes at 470. 470 short strikes. Yeah, Heather, that started happening last week. And the weird thing is, I'll be sitting here using the platform. Inactivity. We're giving you the boot. Good morning to everyone, though. But as a quick recap here, should make sense the market's coming in a little bit. That should make sense because we spent weeks here at 2+ ATR, right? So, at this point, you expect at least the pullback to the 21 EMA, but we are getting a little bit more here. So we got 5 days ahead of us to pretty much wait and see. Does the S&P 500 hold support here at the weekly 8 EMA? And if we do, you have to look at it through this healthy perspective. If we can hold up here at the weekly 8 EMA, not a damn thing has changed about this uptrend. We close underneath it come Friday, we could be heading down to the weekly 21. Still, that's going to look ugly, but still, look at that from a healthy perspective. Pull back to the weekly 21, and at that point, still not a damn thing has changed about this uptrend. So those are 2 important levels. But the first mission here for the old market is to hold that 8. And then for the Q-tips, right, the Q-tips are clinging a little bit tighter here to their 21. So we give them a fighting chance. I don't think you go long here immediately if you hold the 21. This is kind of a multi-day mission. But it's a key level of support on the daily chart. And then on that weekly here, if we don't hold the daily 21, can we hold the weekly 8? And at that point, if we do, I'm probably looking to get long some tech. If we pull back to the 21 EMA here, I'm probably still looking to get long some tech. So pullbacks, I'm going to welcome them here this week. But the weeklies is where I'm going to focus. tune out the noise from my daily chart. Let me focus on a nice bullish structure. So pretty much all the semiconductor stocks, they fit into that category here. You got your Rokus, you got your Shopifys. They fit into that category here. Quick look at Shop. I would actually like a bit more of a pullback on Shop, but we'll keep an eye on that one. And then you get the tech here. Right? The big beast Amazon's firing a weekly squeeze, so I like pullbacks here. And then the Qs in general, firing a weekly squeeze. So I like pullbacks there. But your semiconductors, Tesla's got a weekly squeeze. One that's not clean just yet. And I do think you got earnings coming up here in a bit. Yeah, I'd probably ignore Tesla for now. But that's a look at a few of the things I'm keeping an eye on here as we head into the open. Let's take a quick look at volatility, because this will play a role here this week for show. Yeah, so here's what we got to see, right? Let's clean this up a little bit. All right, push this chart back. Let me get my little drawing tool. Now, more often than not, right? More often than not, here's what you tend to get out of VIX. Big spike in the +2 ATR, and then it dies right back down. And the market just kind of continues on its journey. So you get +2, and then it pulls back, and the market goes higher. +2, market pulls back. Sometimes we get a little bit more here, but a lot of times it's just +2 ATR, +2 ATR. Get a little bit more here, kind of +2 ATR. So definitely keep an eye on this here. This is a spot where potentially you got a nice little flush here in the market, little spike in volatility. This begins to dump back towards the 21. You look for the market to hold some key levels of support. And then with VIX coming back in here, you look for the market to go higher. Volatility keeps popping up here. As long as VIX is spiking, the market probably goes lower. So I think it's a good chart to definitely keep an eye on here this week as well, because that tends to be the case. Quick little +2, +3. It's a 24 to 72 hour ordeal, and then it kind of dies back down, and off to the races we go. So I like that combination. You keep an eye on volatility, and you keep an eye on key levels of support, and then the rest should take care of itself. Keep an eye on the ticks here this morning as well. And as always, it will be an interesting market. But, those are kind of my first thoughts that came to mind this morning when I saw the futures. One, glad I did my job on the way up. Two, glad I protected those profits by keeping trades nice and cute and small here. And three, I'm really glad to have, 90-95% of my account sitting in cash here, really ready to take advantage of any buyable dip the market wants to deliver here. And you can put yourself in that position just by following some simple rules. Right? Get big here, big within a responsible context, but get big here, take profits into that push, and then you're working on layups, right? 1% risk, 2% risk on a trade, nice and cute. And then when things come back in, you're not scrambling, you're not giving back profits, you're more so drooling here at the idea of being able to put some of that capital to work on a good pullback. All that sound good? Yeah, I can see a few of you in the chat here. We've been waiting on this pullback, right? Some of y'all been waiting on this pullback because you're short. Some of you been waiting on the pullback because you want to get long and better entries. Yeah, I think we can all agree there's some beauty to a bit of a pullback here. For the put buyers, obviously they're making money, and then for the fellas like me here, I can't build a big long position up here at the moon. So as we come back down to earth a little bit, definitely attractive, definitely. Fly guy, appreciate that. Love to hear it. Love to hear it. But listen, y'all, the most important thing to focus on here are the indexes. So now I gave you a few different weekly charts to focus on. Those shouldn't fall apart, in a few hours here. So I'm not going to look at daily charts. I'm not really going to put together a watch list here of, action to take this morning. Got to let things play out. Got to let things play out. So I think we'd be patient here, but the weekly squeezes, those are a few things I'm definitely going to be keeping an eye on for sure. And Mohammed, if you're from the options room and that's what you're referring to, 4,300 short strikes. Yep, 4,300 short strikes. Now, I don't know if we get excited about that one just yet. I don't know, because I was thinking that this morning. I went to go get a coffee. I was like, you know what? This thing might turn around here and work. We'll have to see how the market goes, though. Listen, I'm not saying I'm coming in here and buying calls this morning by any stretch of the imagination. This has just been one heck of a market. So, I mean, hey, maybe we do enter a short-term downtrend here, right? Where every bounce to the 21 gets rejected and we're looking to short it. We're looking to take profits down here. But time will tell. Time will tell. We've seen this movie a couple times. Right? Throughout the course of this nice uptrend here, we've seen this movie over here. Little flush to -1, -2, and then big boink. Right? Little flush to -1, -2. Right back up she goes, right? A little flush. So we'll have to see. Here's the key, right? And then I'll let y'all go. That little skirmish, right? That little squabble, that one. Guess what none of those did? And this is the key, right? This is how you can put some context in the daily chart. Guess what none of those did? None of those broke weekly support. That little period of ugliness you saw back there on the daily, it held weekly support. And where were we a month later? Brand new all-time highs. Right? Here, didn't ruin weekly support. Back to the highest. Holds weekly support, back to the highs. Holds weekly support. That's the context you got to have here, right? This sucker could get a little bit ugly. -2, -3, nasty flush. If we hold here, though, your bullish market is still a bullish market. That's when you look for support. That's when you look for exhaustion of all that bearish momentum from the daily charts. For me, that's where I'm looking to sell some put credit spreads. We'll see if we get there. But listen, I wish you all the best of luck this week. I will see you again Wednesday morning for some pre-market prep, and then Chan Man will be in on Friday. And then for those of you in the options room, I'll see you in about an hour and change. But be patient. Focus on a few key levels of support here and stay out of trouble. Talk to you all soon. Appreciate your time.